Let me ask you a question. When markets drop 15 or 20%, do you notice how the headlines start to sound the same? Stay the course. Think long term. That's good advice, but it's not the advice the ultra wealthy are following. The truth is, the wealthy don't rely on Wall Street alone. In this episode of Investing Outside the Box, I'll walk you through why sophisticated investors are quietly reallocating to alternative investments, strategies that provide income, protection, and non-correlation to traditional markets, and how they can help you solve the same problems they do every day. Most investors were taught the 60-40 rule, 60% stocks, 40% bonds. It worked well until inflation returned, interest rates rose, and both sides of the portfolio started losing money at the same time. High net worth investors are realizing that diversification within the market isn't the same as diversification beyond the market. The challenges we see every day include market volatility that creates emotional and financial stress, inflation silently eroding purchasing power, high tax exposure from capital gains and income, and a lack of yield that makes safe money anything but productive. So the question becomes, how do you protect what you've built and still grow it without betting everything on Wall Street? That's where alternative investments come in. Alternatives are simply investments that sit outside the public stock and bond markets. Things like private real estate, private credit, infrastructure, life settlements, and structured income products. What makes them compelling isn't just the potential for higher returns. It's the independence from traditional market cycles. These strategies often generate income that continues even when the S&P 500 is down, and they can provide tax advantages that traditional investments can't.
Family offices are on the rise and increasingly turning towards alternative investments. So this basically means that wealthy families are reducing reliance on those public markets. We're seeing this more and more. We want to diversify our portfolio, and the public markets just aren't holding up to what we remember when we were growing up. So it seems there's been a shift towards performance or wealth growth as a goal rather than that wealth preservation. Alternative investments help achieve this goal by offering competitive interest rates, which could lead to higher returns compared to, again, those traditional asset classes.
Let's start with a retired couple in Arizona. They were tired of market swings, but needed steady income. We introduced them to the Exchange Rate Essential Income REIT, a diversified portfolio of necessity-based retail and medical properties. Over the past decade, it's produced consistent monthly distributions with no capital loss since inception. Today, they're earning predictable income while owning hard assets, not paper promises.
We were just tired of the market swings. Every dip made us nervous, and we never knew what was coming next.
Yeah, that uncertainty really wears people down fast. You wanted income you could actually rely on.
Exactly. So that's when David introduced us to the Essential Income REIT. Real-world things people rely on every day, like grocery stores or medical offices. Essentials like that.
And the difference since then?
Oh yeah, night and day. We get steady monthly income. It's predictable, consistent, and there's been no capital loss since we started. My wife and I are very happy about it.
That's awesome. That's the power of owning hard assets instead of riding market waves.
Yeah, now it feels like our money's finally working for us, not the other way around.
Absolutely. You know, at the end of the day, that's what it's about. Steady income, real assets. It's knowing your money's working quietly in the background.
Next, an entrepreneur who sold his business wanted to keep his proceeds working, but didn't want to re-enter volatile markets. He invested in a life settlement fund through Sirocco Partners. The fund purchases life insurance policies at a discount and collects the benefits later. It's completely uncorrelated to stocks or interest rates. His returns last year were in the mid-teens, and his portfolio didn't move an inch when the market did. Finally, a family office wanted yield without taking equity risk. We introduced them to a private credit fund that lends to mid-market companies secured by real assets. The result? Roughly an 11% annualized yield, quarterly distributions, and virtually no correlation to the stock market. It's not flashy, but stability rarely is.
Family offices have become the fastest growing market for alternatives and private assets. The number of family offices with exposure to alternative investments has increased by over 500% since 2016. That, according to new data from Preqin. Now, the growth outpaced wealth management firms, sovereign wealth funds, and even endowments. There are now over 4,000 family offices with alts investments. That's up from just 650 back in 2016. Now, within the alt space, so that's private equity, private credit, venture capital, hedge funds, real estate, infrastructure, all those things, family offices are favoring private credit this year.
Of course, not all alternatives are created equal. They're complex, and due diligence matters. That's why at Alternative Investment Advisors, we take a fiduciary approach. Every sponsor is vetted, every performance record reviewed, and every offering compared with independent third-party research before we ever present it to a client. Most advisors simply don't have the time or access to review dozens of sponsors. We do. Our goal is to help clients access institutional quality investments that align with their goals, liquidity needs, and tax profile. If you've built significant wealth, you already know that protecting it is just as important as growing it. And yet, many investors are still relying on the same playbook from 20 years ago. The wealthiest families in America are allocating between 30% and 50% of their portfolios to alternatives because they know that true diversification means stepping outside the box. So here's your next step. Visit altsadvisors.com and download our Investor's Guide to Alternatives. Inside, you'll learn the major categories, the risks, the returns, and how each can fit into a well-designed portfolio. Or schedule a private 15-minute call with me or my team. We'll walk you through the same due diligence process we use for our clients and show you how to make your capital work harder with less market exposure. Remember, the wealthy don't rely on Wall Street alone. Maybe it's time you didn't either. Thanks for watching. I'll see you on our next episode. In the meantime, keep thinking differently and keep investing outside the box.